Good evening, everyone. This is Veer Maheshwar Charitable Trust Latur MS India organizing daily international webinar series. This series covers the topic related to education, law, finance, technology, etc. We are daily listening from various speakers on various topics. Today, we are here to listen from our today's speaker, Miss Jyoti Karmiyani Madam, who is Assistant Professor Rajiv Gandhi College of Management Studies, Mumbai. Her topic is Fintech evolution. We welcome today's speaker and we request you to start her speech on the topic Fintech evolution. Welcome, ma'am.
Hello, good evening to everyone. May I start, sir?
Yes, can start.
Yeah. Good evening to everyone, and thanks a lot. Thank you, BETKAR sir, for arranging for rescheduling the timing. Thank you for understanding us. Thank you. So, my today topic is evaluation of fintech. Why I choose that topic? Because I saw that because due to lack of knowledge of the fintech and also the lot of scam are increasing. So because of that reason, I chose this topic. So let me share my screen.
You are muted. You are muted, ma'am. I think you are not audible. Please unmute yourself. You are not audible, ma'am. Jyoti, ma'am. Jyoti, ma'am, you are not audible. You unmute yourself.
Hello. Yeah, now I'm audible, sir. Hello. Am I audible now?
Yes, ma'am, audible.
Uh, Extremely sorry due to some network issue. Net uh, my net was not working properly. Yeah, yeah. Thank you, sir. Thank you, Betka, sir. Thank you. Yeah, fintech is nothing but a combination of two words, that is finance plus technology. Fintech is refers to the use of technology to improve and automate financial services. It helps people and business manage money, payment, investment, and banking using digital tools and software. There are a few examples of fintech such as mobile payment like Google Pay, Phone Pay, Paytm, and another example is the online banking, then digital wallet, robo advisory for investment, and there are many more examples. One more example is a cryptocurrency platform such as bitcoins. And I would like to say how there is one more example such as instead of going to a bank, if you transfer money, if you directly transfer money using app like Google Pay, Phone Pay, we can say this that fintech is in action. Whenever we use demat account, so we can say that demat account is in action. So next slide. There are few essential elements of financial technology such as digital payment, peer-to-peer lending. Digital payment, if we say in a broad categories known as the mathematical fees, including a variety of digital money transfer systems and processes. There are few criteria that this invention in photoelectric fees such as mobile wallet, mobile wallets such as Apple Pay, Google Pay, Samsung Pay, and the second criteria is a cryptocurrency. Cryptocurrency are mathematical or in essence currency that depends on cryptography for freedom. Third element such as contactless card. Contactless card is nothing but a debit card and credit card. The fourth element is a digital fees pay. Digital fees pay is like PayPal, Venmo, and Cash Apps. So these are the few examples and the few criterias of digital payment. Then second essential element is the peer-to-peer lending. Peer-to-peer loan, frequently known as a P2P lending or friendly loaning, is a contemporary of WW platform that directly links borrowers and profit or allied lenders by removing the middleman. Again, there are few criteria in peer-to-peer lending, such as easy investment. Easy investment, it is to expand a risk that can frequently start accompanying limited accounts. Then we have second criteria such as loan authorization that depends on the credit purchase, that depends on the purchaser credit record. The loan are therefore authorized or declined. Suppose whenever we apply for a loan or any credit card, so at that time what happened in earlier times, our QA team they are supposed to check whether that candidate is eligible for loan or credit card is not or not. But today what happened, just we enter our PAN card number, and on the spot with the help of AINN, we get to know that that specific person is that's in past how much loan has taken, from where they have taken, and whether they have paid that loan amount on time or not. Then third is the loan disbursement. Again, when it comes to disbursement, there are two types of disbursement. Disbursement is bifurcated into two: pre-disbursement and post-disbursement. Pre-disbursement come into the loan authorization, and post-disbursement come into the loan disbursement. After such a following loan authorization, the person asking for charity receives the finances in the saving account. Over a fixed time frame, interest is applied to repayment. The next criteria is earning from investors. Investors gain return on the loan as borrowers form repayment, frequently in the form of weekly installment. Next is the next element is the Internet of Things technology. Internet of Things technology is nothing but a IoT refers to a network of affiliated manuals, machines, and objects that are outfitted with sensors and an operating system and permissive bureaucracy. Again, there are few criteria. such as data collection and monitoring. IoT, in the way that sensors and beacons collect boundless amount of dossiers from miscellaneous beginning. In fintech, this data can contain fact about customer conduct, transaction annals, and even material dossiers like tangible condition. For example, smart wearables and affiliated designs can monitor consumer activities, region, and biometric dossiers. The next is the risk assessment and fraud prevention. Just previously we discussed that with the help of PAN card and Aadhaar card, they get to know that previously how much loan we have taken, from where we have how much loan we have taken. So this is how we can prevent our risk and we can prevent our fraud and risk, manage our risk. For example, bank and protection parties, they can use IoT dossiers to judge the risk associated with securing a future by listening to a material factors like hotness, moisture, and safety measures in real time. Credit scoring and lending decisions. Third criteria is credit scoring and lending decision. Um, IoT dossiers may use correct credit success models. For example, lenders can incorporate dossiers from related buses or smart holes to access a purchaser credit worthiness, conceivably superior to more correct lending determination and better agreement for borrowers. Next is asset tracking and management. Yes, we can track anybody's asset with the help of PAN card. Again, with the help of PAN card and Aadhaar card, we can check how much demat account that where that specific person is demat account is, how much that person is earning, how much loan they have taken. This is specifically appropriate in the industry like. Supply chain finance and advantage located loaning, places tracking, and direct property are important. Next is the insurtech. Insurtech that mostly this is mostly used by the insurance company. That insurtech is related to the insurance company. They use this insurtech such as there are few examples of insurtech companies such as Policy Bazaars, and there are many more examples also are there. Let's discuss with the criteria. First criteria is the enhanced service experiences. Uh, this gave us a clarity of online buying, uh, the promoted claims processes, and the custom built insurance procedures. The next is the cost fund. What is the cost? What will be the cost of that specific claim? How much we are supposed to pay to for that specific policy? That we can check with the help of the policy bazaar, with the help of the credit worthiness. So we can check with these are the insurance that insurance plus financial technology companies, or we can say softwares. Next criteria is the risk management. By utilizing the dossiers, science of logical analysis, and IoT devices, insurer can, in a more excellent manner, resolve and accomplish risk. Next is the flexibility and innovation. InsurTech advances novelty in product growth, permissive insurer to offer custom-made protection. Next is the cloud computing. Next element is a cloud computing. Cloud computing is the supply chain of computer duties by way of cyberspace. There are few examples of cloud computing such as that Google Space. Then another one is the AIML. These are the cloud computing examples. We can also say the Alexa. Alexa is also the example of the cloud computing. There are few criteria such as cost efficiency, and there is also one example such as Netflix. Netflix also come under the cloud computing. Is the cloud computing is not these is nothing but the possession on pay as you go basis. Pay as you go basis. First you pay, then we can avail the services. Take the example of prepaid a mobile we use there are mobile services, prepaid mobile services. First we pay, then we can avail services. There are few criteria such as cost efficiency. Cloud calculating remove the need of investing in and claim tangible foundations. Fintech association can use a pay-as-you-go models, reaping only for resources they use. Next is a faster time to market. Cloud plans supply pre-configured money and services that considerably speed the growth and deployment of fintech requests. This brisk incident cycle allow parties to lead new product and duties to retail more quickly. Next criteria is enhanced security. Leading cloud provider invest leading cloud providers invest leprosy in instability and contribute robust measures to look after the dossiers and uses. The next criteria is a disasters recovery. Um, Cloud located resolution include troubleshooting and backup alternative. Fintech guests can surely set up auxiliary scheme, and dossier recovery means guaranteeing that they can quickly resume movement as long as there are no surprising disruption. The next element is the AML. AML AML are freezing the fintech field, contributing artistic answer and period for fiscal institutions, startup, and customers. The best example of AML is the Alexa. There are few criteria such as algorithm trading. Algorithm trading, such as AI stimulate business algorithm, can analyze retail customers and kill trade at extreme speed. Machine learning models can adapt to changeable display environment, improving business gains plan and growing appropriateness. The next is the robo advisory. They offer embodied grant advice without thinking about the rebalancing container and supply economical solution for financials. Next is the customer service and chatbots. Most of the time happens we have seen that whenever we visit any site, the suddenly we see the chatbox, may I help you? So this is the best example of AML. They can answer query, guide consumer through undertaking, and even label potential issue before they escalate. The next essential element is blockchain technology. Blockchain technology is fundamentally a distributed register that enables secure, irrevocable data and conversion over a network of calculators. It runs on a transparent, scattered construction places. One of the ultimate powering invention of the 21st century, blockchain science has acquired popularity fast. Although it was originally used to capacity cryptocurrencies like bitcoins, it has immediately been used in an expansive range of areas. Again, there are few criteria of blockchain, such as trust and transparency. By permitting one of the view the complete undertaking history, blockchain guarantee reliance on mathematical undertaking and specify unique transparency. Next is a cost saving. blockchain can be a cost saving by streamlining undertaking and processes. It is frequently like to cut cost and destroy middlemen. Next is the data freedom. Blockchain is extremely secure and opposing to high tech danger on account of alluring immutability and cryptographic characters. Next is the decentralization. Decentralization gives the crowd more control over their dossier and undertaking. Sir, please next slide. Thank you, sir. Evolution of fintech. Now, how fintech has been started, how fintech has grown in the market. So, the fintech actually it has been started. The first version of the fintech was started in 1886. From 1886 to 1967 is about the infrastructure. This is a term that when we can first start expressing ourselves about the fiscal worldwide integration. The first period, the fast broadcast of commercial fact across border, the key occurrence on this chronology contain the over a period. The first large body of the water wire in 1886 and Fed wire in USA in 1918. It has the first photographic fund transfer scheme that depend on now ancient science to a degree to predict and a Morse code. The second version of the fintech was implemented in 1967 to 2008. It is about the banks again. Fintech, such as we can say ATM machine was installed in 1960 by Barclays in 1967. Then in the early 1970s, the key development like the creation of the Nasdaq, the world first electronic stock exchange, and the establishment of the SWIFT. Then in 1980, we saw the bank embrace the computer technology. In 1990s, we have also saw that the bank has also come across the multiple extremely sorry. The third version of the fintech we have observed in from 2008 to 14. It about the startup. It was the release of the bitcoins in 2009 and the subsequent cryptocurrency boom and burst had a significant impact of the financial world. The 3.5 version of fintech from 2014 to 2018 is about the globalization, the global expansion of digital banking and signals a shift away from the Western dominated financial sector. Then the fourth version of the fintech in 2018 till today is about disruptive technology. Future economic duties, innovation is still being thrown by open investment and blockchain technology. Neobank are the changer, attending oceaning the competitiveness and pricing of established banks. And today, fintech as a science should be ever more principal in finance. On the individual health, fintech startup have taken capital from banks and frequently depend on banking protection and back commission friends to deliver. History of the fintech in 2009 in 1997, The first online banking was started by the Sumitomo Bank in Japan. They presented the first system where banking transactions are completed electronically services. In 1998, PayPal is founded. In March 2000, PayPal came into view after the consolidation between the Confinity Inc. and the X.com. Then in 1999, proto mobile payment and contactless, such as credit card and debit card, they come into the picture. The early 2000 was likewise when extensive use of contactless fees began. Then in 2008, global financial crisis for bank opportunity for fintech companies. The traditional monetary institution knowing tremendous monetary and reputational damage. There are a few examples such as mobile devices technology, cloud estimating, big dossier data, machine learning. And then in 2009 to 2016, fintech matures. And the such as the rise of the smartphones and the online banking presented the beginning of the app that made fintech aid approachable. Fintech. When it comes to fintech adoption, right now the more we say the fintech has been more fintech company we have observed in three different areas, three different regions such as US, European Union, and the Asia. In America today, there are 13,100 total fintech companies are there. When we talk about the EMEA region, there are nearly 10,969 fintech companies are there. When it comes to Asia's Pacific, there are 5,886 companies are there, and the more companies when it comes to Asia region, the countries like Singapore and Hong Kong, they have established fintech sandboxes, allowing the fintech companies to test their products and services. There are few forces of innovation such as technology advancement, innovation in blockchain, AI, and mobile technology. The next is the today we can see the customers, particularly younger generation, they expert financial services to be convenient, personalized, and available 24/7. Fintech companies have capitalized on these expectations. Then fintech has the potential to bring the financial services to underserved population, particularly in developing countries. So please next slide. Thank you, sir. Yes, there are few impact of the disruptions. The fintech disruption impact on the financial services industry is profound. The first disruption of is the traditional business model. Fintech companies had disrupted traditional business models by offering more innovative, efficient, and customer-centric solution. The next is a market competition. The entry of the fintech startup has increased competition in the financial services industry, leading to lower cost, improved services, and greater choices for customers. The last is the merger and acquisition. In response to the fintech threat, many traditional financial institutions have opted to acquire or partner with the fintech companies to enhance their digital capabilities. Future trends are DeFi, quantum and quantum computing and integration with other sectors. DeFi platform, which use blockchain technologies to offer financial services without intermediaries. When it comes to computing, quantum computing become more advanced. It could revolutionize areas like encryption, risk analysis, and financial modeling. The last is the integration with other sectors. Fintech is increasingly being integrated with other sectors such as health and real estate. For example, insurtech companies are using AI to provide personalized insurance products based on individual health data. Um, if anyone have any query related, hello, yeah, any query? Thank you, sir.